Hello and welcome. You tune in to Buy Now Sell Now. I'm Ankita Saxena and with me is Kavita Thaplayal. In the next 1 hour, we'll take you through all that's happening in the market and we'll also get your questions answered and have managements on the back of their results. But first up, let's take stock of how the market is shaping up at this juncture. Well, it's a freaky Friday on D Street today. Well, it was a freaky day of trade coming in as far as the global markets are also concerned. It's a negative global handover spill-off that's coming in on Indian markets, especially the IT sector that continues to reel under pressure on the back of that fears from AI. And that is actually panning out across sectors. Now, if you look at the global indices also, it was not just the tech stocks that saw the shock waves of AI, but also the financials, the logistics, the real estate sector, and that is spilling over in Indian market as well. Nifty as of now is trading down with cuts of 1%, 259 points down. 25,540 is where Nifty is perched at. Nifty Bank is also trading down with cuts of 379 points, 0.6% cut coming in on Nifty Bank. The broader end of the market, let's pull up the charts. That is, really taking it on the chin right now. Mid cap is trading down 1.7% and small caps selling has intensified. That's trading with cuts of almost 2%. It's bloodbath in the market on a Friday, and all the sectoral indices are trading in the red, with Nifty IT actually opened down 5% since previous day's close after the sell-off yesterday also. Right now it is trading down 3% and Nifty IT is, of course, the biggest laggard in the trading session. Kavita, so the sell-off just does not stop, especially in the IT stocks, and it has trickled over to the rest of the market as well.
Absolutely. But then, a lot of stock-specific action, and it's also because we have Q3 earnings coming in. So the next stock in focus is actually Acme Solar. It's down close to 2%, but then a healthy set of numbers that's been posted for Q3. But then what's coming next? We want to know if the margins are really sustainable going ahead. What's the order book like? Let's discuss more. We are joined by Nikhil Dhingra, CEO, Acme Solar. Nikhil, hi, morning, and welcome to the show. Let's just understand in terms of revenue realization, what is the expected revenue realizations timeline from these new order wins specifically, if we have to start off with first?
Sure. So we had a good set of PPA signings last year. And we are expecting the revenue this year to be in terms of from those PPA signings which happened 1.5 years back to come in this year, because there is a typical 2-year cycle to execute a project. So this year we are expecting a very substantial revenue ramp up because of the existing PPAs we have. And that will be, this year we're planning to operationalize 1.5 gigawatts of capacity with a higher tariff and higher realization, higher energy generation yield. So there will be a substantial ramp up this year from those projects. The new wins which we have won recently will give us revenues in 2028. So because of a 2-year cycle, so they give us healthy growth. These new wins which we have won, each of them, the last 2 projects we have won on the peak power and the FDRE bit will give us a revenue of between 600 to 650 crores and an EBITDA of 90%. So that is the addition from these 2 projects particularly. But we have a healthy sort of signed PPAs of around 5.6 gigawatts total capacity, and in terms of the overall capacity, it has now crossed 8 gigawatts of capacity which we have, including the LOAs we have obtained. So as you know, we are in the business of selling long-term power to the government. So our EBITDA and EBITDA is fairly constant at between 85 to 90%. And in terms of the revenue growth, our revenue increases disproportionately when we operationalize a new project. And because the ongoing projects keep running for 25 years. So whenever we operationalize a project like we are doing 1.5 gigawatt this year, there is a step up jump in the overall revenues and EBITDA.
Right. Mr. Dhingra, this is Ankita also joining in. The FDRE project is at a tariff of 6.28 rupees per unit, whereas the BESS project is at a tariff of 2.76 rupees per unit. What factors explain this gap, and how does this impact your margin profile?
So see, there is a difference in the customer requirement between the 2 projects. The tariff of 6.28, which you see, is for the peak tariff, where the DISCOM is currently buying at 10 rupees. This is the highest rate which they are paying for supplying during those, especially the peak shortage hours, which is typically in the late evening. So we are solving that problem by supplying the pure battery power. There is no solar power in this in 6.28 tariff on the from the BESS. All the power is coming from battery energy storage system. So that's the tariff for that project. The other project we have won is a REMCL. The 2.76 is not something we have won. It's something which happened in the industry. So there they are supplying some bit of solar along with the battery. So that is why if you take a weighted average of the solar and the battery tariff, then you get to a lower tariff, because essentially solar power comes cheaper, the battery powers come expensive. The weighted average comes to somewhere in the middle.
Nikhil, just want to understand the new additions in terms of the new orders. How does the order book currently look like, and what's the way ahead in terms of pipeline, if you have something that you can talk about?
Sure. So in terms of the order book, we have capex coming off around 25 to 30,000 crores over the next 2 years. And of course, that is in phases, given the ramp up in the capacity, which I just mentioned. Like we will grow by more than 50% in terms of the operational capacity this year, because we have 3 gigawatts operating. So we are targeting to be 4.5 gigawatts of operating capacity. And this takes a capex of around 12,000 odd crores. So our order book is essentially the capex we do to build our own plants, because we own our own plants. We don't do third-party EPC, which a construction company does. So our order book is measured more in terms of the PPAs we have and the 25-year stable revenue we get. So we have you can say an order book of in terms of crores, that much, the capex which I just mentioned, and in terms of the revenue and EBITDA growth, it will be proportionate to the capacity we are increasing. And of course, there is a disproportionate increase because the capacities we are adding of 2.6 gigawatts in the next 2 years, where the PPA is signed. And we are expecting around 2 gigawatt more of PPA to get signed in another 6 months. So there is a substantial ramp up in the next 3 years from you can say around 4 gigawatts, 4 to actually 5 gigawatts of capacity, including the unsigned LOAs, which we have to do by 2028 and some part of 2029. So this next 2 year capex is for the signed PPAs, where we are growing by, you can say, 1.5 gigawatt this year and 1.2 gigawatt year after, as we mentioned in our analyst call as well.
All right. Finally, Mr. Dhingra, the company has declared the good Q3 results. The finance costs remain elevated, suppressing the profit growth. How does the company plan to fund the new projects?
Right. So we have funded the under construction projects, other than 1 or 2 projects which are just obtained. We have got long-term finance for the projects. We have got good upsides coming from the interest rate reduction which has happened. We have been able to, our weighted average interest cost is around 8.6% on the overall portfolio. And these are all 20-year debt. So consistent with the revenue profile of the project, which is 25 years. So in terms of the interest cost, it is falling it is falling every quarter because of the reduction in the interest rate and improvement in the credit rating. So if the interest absolute amount you are seeing rising, that is because of the operationalizing of the new projects which we get. That is consistent with the revenue increase. If you look at the increase in the revenue versus increases in the interest, the revenue has increased more, which shows the benefit of the operational leverage. So with the increase in each project capacity, the interest cost will increase in absolute terms. But on a percentage basis, it will improve because the interest cost is falling. We are at an absolute positive cycle in terms of interest rate reduction. And also the counterparties which we are working with are AAA. So that will reflect in our borrowing cost as we move forward. So the interest as a percentage, it is supposed to fall. But as our portfolio increases, the revenue will increase and the consequent interest absolute number will increase. But as a percentage, it will fall.
Right. All right, Mr. Dhingra, with that, it's time up. Thank you so much for taking your time out and speaking to ET now on Q3 results. Thank you.
Thanks a lot.
All right, with that, it's time for a short break. But then post that, let's get our equity market expert in, and let's help you out with strategizing everything that's needed for today. Looking at the markets, it looks like a Freaky Friday, but then yes, you need guidance, and for that, coming up after the break are our equity experts. Stay tuned.
And get them answered by our experts. Keep sending in your stock-related questions, the buying price, the time horizon, and your question. The number is flashing on top of your screens. Do start sending in your questions. And we have our experts joining us. G. Chokalingam, founder and head of research, economics research, is joining us, and Kunal Bothra on the technicals. Thank you so much, and good morning to both of you. Let's get started with the first question that's coming in from Mohit from Ludhiana. He says he has 200 shares of Container Corp at a buying price of 512 rupees. His holding period is 3 years. Please guide. Mr. Chokalingam, tell us, Container Corporation, his time horizon is for 3 years. What would be your view?
Definitely can hold. One can even add slowly till March in a phased manner. Because the stock has corrected a lot, and P multiple also has corrected to quite a reasonable level of around 29. Which is quite attractive for this leader in logistics space in the listed segment. Lastly, I believe logistic business has got a great growth potential. If India has to grow above 7%, logistic has to grow much faster. So therefore, I would give a hold and accumulate even if there is any small correction in the stock price.
All right, so that's a recommendation coming in Concord. But then you know what? Before I go ahead, Kunal is with us in the studio as well. Kunal, let's just talk about the market, because right now, I mean, I'm sure there are pockets where one can buy, but then the pockets which are really bleeding. What is the overall view, and how can we look at this current particular structure of the market?
Thank you so much for that. Good morning. So, there are two ways to look at it. If you're a short-term trader, then of course you will be on the little bit on the cautious side over here, and specifically for sectors like IT, etc., which have been taking the heat of the selling the last week, 10 days or so. I don't remember a phase very recently where you've seen IT stocks falling by almost 20% in a span of the last 7-8 days. What we've seen for themselves. So I think in that context, it's a severe sell-off. I think one has to try and just about be a little cautious over here from a shorter-term angle. But from a longer-term perspective, I would actually believe that stocks, mid-cap names, few large-cap stocks, they are at very strong, value opportunities. So it depends on what your time frame is, what your risk appetite is, what your trading style is. I think if you're looking at this as a pure trading market, then I think you just need to stay a little bit on the lighter side of position sizing over here. But on the longer-term side, I think it's a very attractive territory. For short-term traders, I would look at 25,500 as a pivot support for the index. This is where we bounced off, I think, a week back when the index had seen a mild correction post the tariff news flow. So I think if you manage to just about hold on to the 25,500 mark, there could be a chance or maybe an expectation that the market may come back into a very mild short-term bounce on the near term for the indices.
All right. Let's, before we get all your questions answered now, first, let's quickly take an exclusive round.
टेंशन किस बात की सेंचुरी प्रो
going forward, let's get connected with Mr. Vivek Gupta, MD CEO United Breweries. Hi Vivek, morning and welcome to the show. Let's break down the Q3 numbers first. While overall you've posted strong set of numbers, but volumes are down by 1.3%. What explains this divergence in financials versus operating performance?
I think I would say that our operating performance has been very strong. While the volumes were down, our revenue are up 4%. And we also had 200 basis point of gross margin improvement, 87% increase in EBIT, because the volume is, when volumes are, it's a scale business. So this actually reflects the structural work we did to making sure that our cost structure is right. And we are actually working on the right state mix as well as the right product mix. The volumes are soft for the last 6 months. They're driven primarily by weather. We don't want to make excuses, but the reality is rains and the cold winters has really led to decline in the category, especially in the last 6 months. The second big issue has been affordability of beer. In the key states of Rajasthan, Karnataka, Telangana, West Bengal, Odisha, there has been significant impact because on the relative pricing of beer versus the entry-level spirits. Now, we have been working with the state governments, showing them the data and through Brewers Association of India to really have the fair policy on beer, because affordability on beer is an important aspect. And we are really hoping that as the new excise policies come, they'll consider the impact of beer due to weather as well as affordability.
Right. Also, quarter three volumes have declined 1.3% due to winters. Have the trends improved in January, February, and are you still confident of a 5.5% to 6% category growth in the second half of FY26 or early FY27?
Yeah, no, we are absolutely, we're really working on making sure the category grows at 6 to 7% in medium to long term. I think we have seen green shoots in December and January month, where category is coming to slightly lower than mid-single digit. So from negative, it is bouncing back to 3 to 4%. And we are hoping with the summers setting in, we see a category recovery. And if we get some good regulatory tailwinds, we should be seeing a mid-single digit to 5 to 6% category growth back on this category.
You mentioned in the earlier response that for Kingfisher Smooth Strong Premium in Rajasthan and Heineken Silver in New Delhi, what is the rollout plan in other states?
Yeah, no, I think Kingfisher Strong Smooth is one of our flagship innovation. And I've also mentioned that this is going to be game changer for both category growth as well as the brand power. This is actually designed as a less bitter but stronger beer. Our claim is strong B, smooth B. In Rajasthan, we're already seeing distribution of this in almost 50% of the Rajasthan stores. We have started launching distributing in Karnataka from last 2 weeks. We expect to launch it in one more state very soon. For competitive reason, I don't want to share the details, but we expect that by end of this season, we should have this product in at least 5 more states.
Right. Also, with barley inflation expected at high single digits, how much pricing headroom do you have to protect the double-digit margins?
For us, as you know, in 60 to 70%, the pricing is dependent on the state corporations. We are actively sharing the data with them, not only on barley, but the aluminium commodity cost increase. And for us, it's extremely important that we continue to have healthy gross margins because, as you know, that the whole operational cost in running a beer plant is very high. So we are working with the various corporations and sharing them the cost cards on inflationary data. And we also working an internal program on productivity and redefining our cost structure so that we can also fuel the growth by having internal optimization of cost wherever it's possible.
All right, on the UP Greenfield Brewery now, what capacity will be added and how will it support the premium expansion and also the market share gains?
Yeah, no, our land work is already started in the UP Brewery. Our land registration is done. Our designs are all ready. We are waiting for some regulatory approvals from the environmental board and other regulatories. Thus, as soon as we get it, we will start the work. We expect this brewery to start production in the middle of next year. We are very excited that this will have state-of-the-art plant with the Heineken production locally in UP. Today, we don't have Heineken production in UP. And I'm also encouraged with the state government's policy, which has come up on exports. UP has become first state to have a 3-year export policy on beer and other products, which will also help us to utilize the capacity and expand Heineken and supply in other neighboring states as well. So overall, the project is on track. We are working on with the government to get the necessary regulatory approvals so that we can start the construction. But I'm very positive about how this will actually expand the category and bring our premium portfolio locally in UP, especially Heineken.
All right, Mr. Gupta, on that note, thank you so much for joining us. It was a pleasure to have you on the show. We'll let you go on that note and get going with all the stock-specific questions that have been trickling in. And let me get on board Mr. Chokalingam and Kunal both yet again and start with the questions then. This one's coming from Manisha Kala. She says she's a regular viewer. Thank you so much, Manisha, for watching us. She says she wants to know about HAL. Should she buy now? And she also wants a long-term view. Kunal, first I'll come to you for the entry point. Is it a good time to enter HAL? And then Mr. Chokalingam, I'll come to you for the fundamentals for HAL.
Yeah, I think long-term wise, I think defense are supposed to be a good bet. They have to be part of your core portfolio. And the two top names which fall in this category have to be BEL as well as HAL. So I believe in the context of long-term, I think both of these stocks look attractive. I would suggest a slight better allocation towards BEL. That's a much more better bet, purely in terms of the price trends over the last 3, 4, 5 years, where the stock has done remarkably well. HAL, the reason why I would believe that at current levels it looks attractive, because the risk reward is a lot more better. The stock is down by almost 10% from its 200 moving average, which is around the 4,600 plus mark, and the stock currently placed at 4,200 levels. So that makes the risk reward to enter the stock at current levels also attractive.
All right. Chokalingam sir, any specific view for long term?
Recommendation, and I am extremely bullish not only for long term, even in the short term. Order book is huge. Defense has increased defense outlay, particularly for maintenance aspect. It has increased substantially. Very interesting insight about HAL is that almost 3/4 of the revenue comes from the spares and maintenance and repairs. So that is where I am very bullish. And third, the gross cash is more than the annual revenue. So and if you look at the order book also, it is multi-year sales it can meet. And yesterday evening also the company announced procuring order for aircraft. So all this give me tremendous confidence in the stock. I give a strong buy recommendation.
Right. So strong buy coming in on HAL. But with that, it's time for a quick breather. Don't go anywhere. We'll be right back.
Where Raptel has dismissed the plea, which also means that now CERC can proceed with the coupling regulation framing, and which in turn will definitely which will impact IEX in terms of their market share and margins due to uniform pricing across exchanges. We can already see in today's trade it was down 5%, now also it's more than 3% down. So definitely that's a sentiment dampener for IEX, where the plea has got dismissed. But let's move on and let's take our viewer queries question. And this is coming in from Ramya from Chennai. And she's got 110 shares of Godrej Agro at the price of 783. And she wants to know how long should she be waiting. So let's take a technical as well as a fundamental view. Kunal, I'll come to you first. Godrej Agro 783 is her buy price.
See, I think you should hold on to the stock. I think it's starting to see a very good recovery. The volumes which have improved for Godrej Agrovet in the last couple of days, the price trajectory in the last 1 month broadly for the stock forming a bottom at the 500 levels and now moving higher northwards towards 600, 650 mark indicates that we are looking at a steady recovery for the stock in the near term, and this could probably result into the stock going into an uptrend. And so I would suggest to hold on to the stock. Maybe I think if there is a scope where you can look to average, I would suggest, in case if the stock, say over the next 1 week of the uptrend gives you a mild correction, comes to 575 to 600 territory as a zone, that's a very good zone where I think you should look to average so that you can bring your cost price lower.
All right, so that's the view coming in on Godrej Agrovet. But let's move on and go to the next question from Narsimha Reddy. He says that he wants suggestion on 2 mid and small cap stocks in different sectors for the long term. Mr. Chokalingam, now that mid and small caps have corrected considerably, is there a valuation comfort, and is there any pocket or stocks where you also see the earnings growth coming in?
Yeah, certainly. Small caps as a whole, they have fallen almost 30 lakh crore from September peak. I believe the weakness may continue till March this year, but that would be a great buying opportunity. I am having a very optimistic outlook on small and mid cap. I believe they will outperform the Sensex and Nifty in FY27. So having said that, we have a buy recommendation on 2 stocks. One is ISGEC. It has come out with a very good performance in Q3, despite there is a pressure on corporate earning. And second one, Bayer Crop Science. This also has come out with a very good performance. In fact, it has grown the profit substantially on year-on-year basis. And Bayer Crop is play on agri theme, and it is close to 50-week low. It's an MNC stock, and they've gone aggressively on the digital farming. So that gives a lot of confidence. ISGEC, they are trying to sell one loss-making unit in Philippines, and that is likely to happen. That will bring a lot of cash. And the growth in the engineering business is really great in Q3. So these are the two stocks I have a lot of confidence. Personally, I do not want them, but I have very high level of conviction in these two small cap stocks.
All right, next question coming in from Lakshmi, and she's a senior citizen. She's from Hyderabad, long-term investor. 4,800 shares of Vinati Organics. The future prospects she wants to know of the company and whether she should be holding on or booking her profits. Chokalingam sir, I'll come to you for this.
It used to be a great company. Of late, there is a growth momentum lacking, but product profile is good. So after the stock has corrected substantially, I would recommend a hold on the stock. In case it marginally falls, one can buy.
All right, moving on to the next question then. This is coming from Jay Krishnan from Kerala. He has Infosys at a buying price of 1,670 for the medium term. He wants to know if you should exit or shift to Maruti at current levels. Interesting question, Kunal, especially when the IT counters are under deep pressure. What would be your advice?
No, I think stocks like Infosys, TCS, etc., they've managed to withstand even the dot-com bubbles and all the bubbles which have been created over the last 20 years. So yeah, I think there could be short-term pain which could be seen into this stock price, but companies and I would sense in that case evolve and they surpass all of these kind of negativity surrounding them. So I believe in that case, I would believe stocks like Infosys have to be a part of a core portfolio. The only question over here now would be in terms of timing. If you're looking to average out further so that you can bring your cost price, that timing part I believe could be some distance away, because the short-term selling in the last 1 week, 10 days, a 23% plus kind of a drop on stocks like Infosys, which is a very rare sight, which you see into stock price, could have some effect into the stock in the next 1 to 3 months. So I would believe just wait out for that time when the negativity and the news flow subsides for the stock price on the negative side. There could be better opportunities in terms of price which could arise where you can look to average names like Infosys.
All right, let's move on and let's take this question. This is from Mr. Dayanand RK from Bengaluru, and Orient Cement for 6 months back he had bought 200 shares at 205, currently under losses, and he wants to know if he should be averaging this. What is going to be the target for next 6 to 12 months? So Kunal, first to you, and then I'll go to Chokalingam sir also for this.
So Orient Cement has been a stock which has fallen down very sharply. I think from 350 levels in 2025 itself, the stock has fallen down to almost 160 mark. It still looks like a stock which is very high beta. I would suggest not to average the stock at current levels and use maybe decent rallies into the stock price as an opportunity where you can look to exit. And then even if you're looking at investing into the cement space as such, I think there are better stocks which are available. You can look at Ultratech Cement, Grasim, etc., which have done very well for themselves, especially in the last 12 to 18 months. So I believe investing into these other stocks is a better opportunity.
All right, your take on Orient Cement, Chokalingam sir?
You can hold it. Of course, I agree. It's not a great stock, but stock having crashed and trading at a 10 PE, and also we have seen 3-4 acquisition in the small and mid cap cement space last year. So therefore, tactically, I suggest hold. There is a tactical possibility of stock rebounding at least anywhere 10 to 15% from current level.
That's the word coming in on Orient Cement. Let's move on to the next question. This one's coming from Mamta here. She says that she's invested in Interglobe Aviation on 7th of Jan 2025 at a buying price of 4,350. She wants to know if she should hold it for the longer term. Mr. Chokalingam, long-term view, what would that be? Should she still hold on to Interglobe Aviation?
Yes, I believe. I think it's a great stock to hold for medium to long term. All of us know it's a leader. What gives me confidence is that despite all these difficulties with the regulator, some curtailment in the freedom of operation in the recent time, I think it is going to be very difficult for small players to get into Indigo's market share, because all the competitors are not having the kind of grasp cash Indigo has. Indigo has enormous cash. So market share may slip down even from 60 to 50, but I doubt whether it can fall below 50% at all. And second trigger which gives me a lot of confidence in the stock is that I have a very negative view on oil price. Oil price already corrected 15-16% from 52-week high, and it is likely to fall much more. That would be favorable. And third, India's airlines industry story is perennially very positive. Of course, the oil price hits the margin, but otherwise, on top line, it's a perennial because of the geography, middle class population, overall population, service sector, dominant source of economic structure, and aviation is a backbone of service sector. So all the tailwinds on industry still remain intact. So therefore, I would have a strong conviction in Indigo for medium to long term.
Long term, that's a thumbs up from Chokulingam sir. And with that, it's a wrap on the show as well. Thank you so much, both of you, for taking your time out and helping our viewers with their stock-specific strategies. And that's it in Buy Now, Sell Now today's edition. But then a short break, and post that we'll get you markets at noon. Stay tuned.